Welcome back, everyone. Did you buy your house when rates were a little bit higher? Stay tuned. You're going to want to learn about this. My name is Rob Bell. I am a U.S. Army veteran with over 2 decades of mortgage lending experience. I am your high-speed, low-drag VA Loan Pro. Today, I'm going to talk about my favorite entitlement that's only available to you after you've gotten into a VA loan that can help veterans and their families save big on their mortgage payments. The IRRRL. That's an acronym. You know how much the military loves their acronyms, standing for Interest, Rate, Reduction, Refinance Loan, or IRRRL for short. Whether you're a veteran or active duty service member, purchasing your home is a huge achievement. Huge. But what if I told you there's a way to reduce your monthly payment and save tens of thousands of dollars in interest over the life of your loan? That's where the VA IRRRL comes in. Back in 1980, the VA rolled out this program to streamline the refinance process to help veterans reduce the rate of interest on their VA-backed loan without having to deal with all the income documentation or inspection. This is the easiest loan. It's so easy your butterbar could do it. On average, it takes less than 2 weeks from start to finish. Now let's talk eligibility. If you're a veteran or active duty service member that's currently in a VA loan and haven't been more than 30 days late on your mortgage in the last 12 months, you're likely eligible for an IRRRL. And you have to have been in your current VA loan for at least 210 days. So if you've had your VA loan for at least 210 days and have been more than 30 days late on your mortgage payment in the last 12 months, you should be good to go. With an IRRRL, the savings can be significant. By securing a lower rate, you could potentially save hundreds of dollars a month and tens of thousands of dollars over the life of the loan. What could you and your family do with that extra money? Plus, a nice bonus is you get a payment vacation. When you refinance, you can skip between 1 to 2 mortgage payments. And if you're comfortable with your current payment, I can show you a way to knock years off of your loan. Let me show you. In this example, Sergeant Slaughter bought his house for $300,000 last year and has an interest rate of 7.25%. And he's made 7 payments so far. His current principal and interest payment is $2,047 a month. After applying for his IRRRL entitlement, he now gets a rate of 6.25%. This lowered his monthly payment to $1,847 a month, saving him about $200 on his payment. Now, I know you're saying I'm going back to 30 years. Yes, this is true, but let's take a look and see how much you save in interest and see if it's worth it. It's 3rd grade math, and I have a calculator. So, and again, in this example, Sergeant Slaughter's made 7 payments already on his loan, so he has 352 payments remaining. That means he has $720,378 left to go to pay his house off. On the new loan, even going back to 30 years, he will pay $1,847.15 a month times 360 is $664,974. Simple math, $720,378 minus $664,975 means he will save $55,444 in cash over the life of his loan. Now let me show you if you take that $200 in savings and apply that right back into the loan. Pretend that your payment didn't even change and what that can do for you. You can pay your home off in a little over 23 years, saving you 82 payments, saving over $167,000 in interest. 82 times 2,047 is $167,854. The math's going to be a little different on the calculator because it's taking in the pennies, so realistically, it's closer to $168,000. Now, there's a lot of misconceptions about the VA IRRRL. A lot of people say, this loan is too good to be true. There's got to be hidden cost, hidden fees to it. Yes, there are some costs involved, but the VA ensures transparency and affordability. The logic is, if you can afford your current payment at your current rate, you can afford a lower payment at a lower rate. And since the VA backs the loan, they want you to have a lower payment because it's going to lower the chances of you ever defaulting on the loan. It's a win-win for everybody. A couple more misconceptions. The most common one is that you can only use this benefit one time, and that's just not true. You do have to wait 210 days, but you can use this program anytime you can lower your rate by at least 0.5%. I personally have done an IRRRL on my current home 4 times since I bought it. The second is that you have to be living in the house as your primary residence. Not true either. Let's say you moved out, you've ETS'd, you've bought another home. This entitlement is available on any house that has a VA loan currently. And last but not least, another misconception is that you have to have a good credit score. Well, that does help, but the VA does not have a credit score requirement. I have several lenders that I'm approved with that don't have a FICO requirement for an IRRRL, just that you haven't missed any payments on the loan. And there it is, the VA Interest Rate Reduction Refinance Loan. Another valuable tool to help veterans save money and save time with their mortgage to help build wealth. Thanks again for watching, guys. As a veteran and a loan officer with 2 decades of experience doing VA loans, not enough of us know about this program. I'm always here to be a resource for you and your family to help you save money in all things mortgage related. If you have any questions, please feel free to comment down below or reach out to me directly. And if you felt that I earned it, please smash down on that like button and subscribe to the channel if you want to get more information regarding everything VA loans. As always, stay informed, stay alert, stay alive. Your VA Loan Pro,